Shares of PepsiCo are getting a jolt today after the food and beverage giant posted third quarter results that trounced forecasts on the back of strong performances at Frito Lay, Quaker Oats, and within the beverage portfolio. Joining us from PepsiCo's headquarters is Hugh Johnston, the company's chief financial officer. Hugh, let's get right into it. I think one of the stronger points of the quarter was Quaker Oats. You know, it hasn't been the normal case where Quaker Oats has done so well, but take us through what's happening there.
Yeah, you know, we feel terrific about what's happening in the Quaker Oats business. In both sides of the cereal business, the hot cereal as well as ready-to-eat cereal, we've been gaining market share. We've been innovative with new products like Quaker Steel Cut Instant Oatmeal, which consumers are really warming to. We've got a good premium line of oatmeal that's causing that business to perform well. And as a result, we saw 2% revenue growth, and then we actually saw 17% profit growth, ex-lapping a gain from last year. That's driven by a combination of strong top line, good pricing, and good productivity in the business. So Quaker's coming together quite nicely.
And what also is coming together quite nicely, Hugh, I think, is the beverage portfolio. Take us through it, because another good quarter of volume and also in terms of productivity. Is it the soda business? Are people drinking soda again? Or are they gravitating to a couple other products within there like a Tropicana?
Yeah, look, you know, we're continuing to innovate and make that portfolio work really well. The team we have in beverages, I think, is doing a wonderful job finding that right balance between growth and productivity, which is the way we're running PepsiCo these days. A couple of facts for you. Number one, carbonated soft drinks still under pressure, down about 2%, but non-carbonated beverages, where we invested ahead of the curve in order to acquire the leading brands and to build the leading brands, we're up 10% on the quarter. Gatorade had a terrific quarter, Lipton had a terrific quarter, Starbucks had a terrific quarter, Tropicana did really well. So you really have that wonderful portfolio of non-carb brands that are performing. In addition to that, we've got a strategy in putting out coolers that we call pure plays, and they're focused specifically against those non-carbonated brands. And as a result, we're seeing terrific lift on those. And in addition to that, good price appreciation, because as we sell single-serve product, those tend to sell at a higher price. So the North American beverage team, absolute kudos, did a great job and delivered just a barn burner of a quarter.
And real quick, pleased with the response to the new Diet Pepsi?
You know, the new Diet Pepsi, it's early days. It just came out in August. Too early to talk about numbers there, but what we're hearing from a social perspective is very positive. Both from the product concept, people do like the notion of aspartame-free, and then when they actually try the product, they like the product quite a bit as well. So I think we've got a winner there.
Jumping outside the U.S., a little bit more sluggish results, I would say, in parts of Asia and Europe. Globally speaking, what are you seeing? What are some of the most challenging markets at this point overseas?
Yeah, certainly. Right now, China and Russia are challenges, but one of the beauties of the way we've constructed the PepsiCo portfolio is to sort of balance out these economic challenges that are always going to happen around the world. So, you know, I've been CFO now for 5 years. A couple of years ago, I remember us facing challenges in North America, and China and India were really growing well. Russia was really growing well, and that was making the PepsiCo portfolio work. Now China's a little bit softer. Russia's obviously facing its challenges, and Brazil's facing some challenges. And at the same time, North America, both from an economic perspective and from a PepsiCo performance perspective, is doing really well. You know, one of the things I'd point to is one of my bellwethers for the U.S. consumer is convenience stores. And we actually saw convenience store sales up 7% for the quarter across the North American beverage business. Across the North American business, beverage as well as food. That tells me that the U.S. consumer, at least the ones that buy our products, must be doing pretty well. And that's helping to balance out the portfolio challenges. It's the way we constructed the portfolio, and it's continuing to work.
Well, that's certainly good to hear. Thanks for joining us, Hugh, and good luck this quarter.
Absolutely. Thank you, Brian.